Is HIMS and HERS Health the new weight loss drug stock to buy? Maybe, but not because of the media, but because of the most recent data on the last trading day, Friday, May 31st. So in this video, we will analyze this data of unusual option activity to find out how wealthy investors are trading HIMS and HERS Health. Are they bullish or bearish? So we can trade in the same direction to make money. Because as we all know, the rich have more resources to access more information, sometimes insider information, to make better financial decisions. No wonder the rich get richer on Wall Street. So before we get into the data analysis as usual, a quick background to the stock, because you may be wondering, didn't this stock rally already? 30% on May 20th. On this day when the stock gapped up substantially because the company announced a new product, GLP-1 injections for weight loss. So this new product caused the stock to soar. Now, what is this product? These GLP-1 injections? Let's take a look at an official website here. The U.S. Food and Drug Administration website, FDA.gov. These GLP-1 medications are semaglutides. Okay? And what is this semaglutide? This is the active ingredient found in these very popular weight loss drugs, Ozempic and Wegovy. And what is happening now is that even though these drugs have patents to prevent copycat products from competing against them, but because they are in shortage, you can see here, they are under the FDA's drug shortage. This active ingredient, semaglutide, can be compounded and sold. Another type of version of the drug. And that's what HIMS and HERS Health is doing. They are selling a different version of the drug to compete with Ozempic and Wegovy. And so because of this, the stock is rallying. And when this was reported in the media, this stock started to rally. And so, having said all this, let's dive into the data. Not the media, but the data as to how wealthy investors are trading. Let's take a look at the options time and sales tape. As we can see, on May 31st, we had 1,498 contracts being traded for the August 16 30 strike calls and the 19 strike calls as well. 1,350 contracts. So we have two unusual options being traded. Now, you may be wondering, because this is colored red and they are being transacted at the bid prices, which is why they're colored red, that this is a sell. But take a deeper look at this transaction here. Same 19 strike calls. Same time, 9:44 at the 10-second mark. And you can see, same price, $3.40, right? But you can see this is being transacted at the ask price, okay? So you can see how this can get confusing if you are analyzing this type of data. So there's actually other variables in the market that you have to analyze to actually know what exactly is going on here. Because these are colored differently, even though they're being traded at the same price and the same time. The same thing goes with this 30 strike call here. You can see the time, 9:52 at the 48-second mark. We can see here at this trade entry here, same time, 9:52:48, but it's green here. $1 being traded at the ask price. Right? Same thing being traded for $1 as well. Okay, so this just is a good reminder that we cannot just use the colors on the options times and sales tape to decide if something is a sell or a buy. There's other types of data that we have to analyze that requires a lot more time to delve into, which is what we do. And that is why other websites and scanners that try to analyze unusual options typically will get it wrong, and they're not as accurate as what we do in our analysis, because we look at the entire market data and analyze and put a lot more time manually looking into this, not the automated process with quick outputs that the other websites and scanners do. All right, so based on our analysis of this data, you can see what we did. For the August 16 options, you can see that we bought it because we believe there's a higher chance the majority of these calls were being bought and not sold. And you can see there was a total of 10,504 contracts being traded on May 31st for the 19 strike calls. Opening trades, because you can see the open interest is much less at 6,486. So we are in this same position. We are also buying these 19 strike calls and using position sizing as a way to reduce and manage our risk, because this is considered a lower chance of profit trade in comparison to the trades that we share on our website. If you want the higher chance of profit trades, make sure to check out our website. We'll put a link at the top where you can gain access to those stock picks and our strategies that we use to reduce our risk in order to increase our profits. So when we take a look at the other unusual option trade, we can also see that these 30 strike calls are also being opened. You can see the volume 3,977, much greater than 972. And so for both of these strikes, they are buying these call options. Okay, and we can see from the tape that they had paid $340 for these 19 strike calls and $100 for the 30 strike calls. Okay, so this is $340, and the other one, the 30 strike calls, are for $100. Okay, so when we analyze both of these call options on the profit loss graph here, you can see here the y-axis here representing profit loss. This is the zero break even. So if the purple blue lines are above the zero, that is profit. If it's below, it is a loss. And the share price of HIMS and HERS stock is on the x-axis. So you can see as the price of the stock goes up, these call options increase in value for profits. If they go down, it is a loss. So we know that this is a bullish long trade. Okay, you can also see this when we analyze the other 30 strike calls as well. Okay, and if you understand options, you can also see that the Greeks over here have a positive delta that also indicates this is a bullish long trade. Okay. Now keep in mind, because these options are long calls, singles, they have a theta decay. What we mean by that is, you can see here, there is a theta that is negative. This one has a -2. Okay, so it decays in value through time. Okay, so that's why the break even for the blue line here is much further up in the stock price, because this is the break even at expiration, because the blue line represents the expiration date. You can see this box here. So the break even at the expiration date for these options is around this $22.40. The share price has to be above this price for this to profit. But the purple line, which represents the current date, you can see its break even is actually closer to where the stock currently trades at $19.42, because if HIMS and HERS stock rallies quick enough, fast enough, it becomes profitable immediately. Okay? Because through time, this break even starts to shift towards this break even, right? That is the expiration, August 16. Okay, so that is something you want to be careful of and be aware of if you do trade these single call options. All right. So for our strategies, we typically will sell other options, not just buy options, as part of a strategy that helps us reduce our risk. If you want to learn more, make sure to go to our website on our strategies and our stock picks that increase our chance of profit on different stocks that the wealthy investors are trading. Let us know in the comments below, what do you think about HIMS and HERS Health? Do you think the stock is a buy? Will it continue to rally based on the data, not the media, which caused this initial rally, but the data now that we've analyzed it? As usual, please smash the like button. Take care and have a great day.